Good morning and welcome to the CLPD accredited webinar. Our topic today will be on fintech. And my name is Jean Visser. I am a legal assistant here at Fichte Co, and I will be hosting this session. As we all know, fintech is a huge market disruptor and a rapidly growing industry. As such, we've had many inquiries from our clients regarding the legal implications of this. And so we thought this would be a good opportunity to just hold this webinar to answer some of these questions and give you some insight into the key topics. So we have allocated an hour for this presentation, and it will be split into two segments. The first half will be a presentation conducted by our senior associate here on the corporate and commercial team, and she will be covering some key topics, and these include the transition to a cashless society, overview of the legal framework, key legal trends, as well as an overview of UAE incubators and equity investments. And so without further delay, I will give the floor to my colleague, Dr. Laura Voda, to begin her presentation. And yes.
Good morning, everybody. Thank you for joining. Thank you, Jan, for the warm introduction. Thank you again for joining the webinar today. I hope it's going to be interesting. I hope that we will all learn something from this. We are very happy to take your questions and answer to those. As a law firm interested to develop further this domain, fintech, in the market, we indeed received a very high number of inquiries, of questions, and we have observed that the fintech law is not an area that much explored in the 2020 legal environment for, let's say, lawyers. Therefore, we decided to approach this niche sector. And in order to begin with our presentation for today, obviously the paradigm shift these years goes to a cashless society, and we are willing to explain that. Why is this happening? At first, in order for us as lawyers to define the concept of fintech or fintech law, we would need to look into the union of two major industries, the financial services and the IT, information technology. Therefore, for us as lawyers, the domain is a hybrid, is a sui generis in nature, as we call it, and it needs to encompass legal elements from both these industries. On top of that, there's a huge comprehensive regulatory umbrella that needs to be, I would say, followed in order to be able to activate in this domain. And further on, in discussing fintech, we can continue with this taxonomy for a number of other domains or subdomains. We discuss about crypto assets, cryptocurrencies, coin offerings, financial services, IT solutions, lending, crowdfunding, etc. Obviously, in the colloquial sense of speaking, people tend to understand by fintech only cryptocurrency and at some point blockchain, which is not the case. The domain is actually much wider than this, and in terms of areas of law, obviously we discuss about taxation, corporate, intellectual property, licensing, royalties, etc. But why are we moving into a cashless society? The fintech solutions are cheaper, approachable for the end user. And when we're discussing about fintech, we are discussing about a relatively low number of historical years. The fintech industry has a newer formation, a newer origin. And because of this, we would understand, or we would observe as a fact, that different markets entail different regulation. The regulation is not well structured because in the technology domains, as everyone knows, it's not the society that dictates the law, but it's actually the development that dictates the law. So at that point, a lawyer would need to innovate a lot. or would need to, let's say, link various legal concepts yet applied or less applied to a specific domain to a certain legal situation. All in all, we are discussing about a market that has a huge potential to grow, and that would entail an overall margin of around about $300 billion in the 3-4 years from now. But aside from these very competitive, cheap solutions that the fintech technology is providing, it develops indeed an auxiliary market of IT services that entail a lot of IP, intellectual property, contracting, licensing, etc. But at the same time, it is a market that attracts investments. Obviously, its popularity grew with the development of blockchain, with the development of cryptocurrencies, etc. But as said, we would not limit our discussion only to those. We can see that now in 2020, in the pandemic or post-pandemic, whatever you want to call it, the fintech apps, technologies, software were the easiest method to streamline financial services. All in all, as a market trend in UAE, we are moving from a comprehensive Series A of investments towards a Series B. Things are evolving, so we are not discussing only about investments that are seeds, but we are moving towards, let's say, complicated ventures. All in all, the products developed via financial technology are asymmetrical assets. The tokenized transactions represent actually asymmetrical assets because these tokens represent, let's say, liquidity, if you want to call it like that, an asset that is first one to be liquidated in the post-pandemic era, because we've seen now in 2020 that markets tended to overreact. The crypto assets or the cryptocurrencies have been the first ones to be liquidated. The market became cleaner. It's less speculation over there. But at the same time, we've seen the downturn, the fact that the venture capitalists are not yet as they used to be. The liquidity providers are not there, are affected. And we would say that in this particular domain, only the strongest and, let's say, companies with the cleanest, adapted, decentralized corporate culture tend to remain. Now, looking back into the UAE, and since we are looking to develop a proper, let's say, legal framework for fintech services in here, we would move to the next slide in order to have a clear or a brief overview of the legal framework in UAE. As you know, for the traditional spectrum of financial services, in here we have three main regulators. We have the SCA, the Commodities Authority for the mainland UAE, and the relevant authorities in DIFC and ADGM. But then all in all, it depends on what exactly we are discussing about, because we've seen that in UAE, as lawyers, we've been approached to advise on a high number of contracts related to either artificial intelligence development, either to application programming interfaces, offerings, coin offerings, funding, etc. So from our first interim conclusion is that regulation-wise, indeed, we have the regulation that pertains to financial services per se, but a lot of sectorial regulation legislation that needs to be considered. So all in all, yeah, the domain is comprehensive in the sense that we look into the financial regulation, we look into the corporate regulation, yeah. We develop corporate structures, appropriate investment structures for fintech services, but at the same time, we would need to look into data regulation. Obviously, there are new developments, especially in DIFC now in 2020. We would need to look into intellectual property. We would need to look into how to capitalize these assets. There's a lot of corporate spectrum of regulation applicable. I would say something which is very fashionable these days, the economic substance regulations, and so on and so forth. Now, for the financial regulation per se, we are seeing that the market is moving and the regulatory spectrum is evolving. I'll give a couple of examples in here. Obviously, we would not have the physical time to refer to absolutely everything, but I would, let's say, highlight here the most important developments in the past 2-3 years. And in the mainland UAE, as you can see on our slideshow, we have a lot of developments such as the pilot licenses for fintech technologies, the 2007 regulatory framework, which is still applicable for financial services. We would have the drafts that have been issued for crypto assets. We have the 2016 blockchain technology. Blockchain is currently being used, in UAE by a number of banks, by a number of governmental bodies, say the Dubai Land Department for streamlining end-to-end real estate transactions. What these financial regulations or the regulatory framework, especially the one in 2017, highlights is the fact that the financial services or the PSPs, the payment services providers, can be non-banks. And the same line is maintained in the ADGM and in DIFC regulations, as you can see on our slide. What does it mean? In the mainland UAE, for example, we have a couple of sectors which are retail banking or retail PSPs, micropayments that can be actually done via non-banks or via, let's say, financial institutions that are not necessarily banks. What does it mean? It means that from a pure legal perspective, the market is open for accepting certain, let's say, technologies, certain new actors that indeed, subject to certain licensing requirements, can render or can challenge the paradigm of traditional financial services and turn it to a, let's say, rather obsolete system. We've seen that the banks in the region, not only in UAE, but in the region, are open to develop fintech apps or fintech related products, which is, I would say, a good development. So all in all, from the financial perspective, the regulation is evolving and is actually developing an overall regulatory framework that would incentivize investors, entrepreneurs, and existing businesses to come into business in UAE from this perspective. Not only that, but whenever we're discussing about financial technology, we discuss about software. And when you discuss about software or associated products, obviously we discuss about intellectual property. And we know that that's a currently very well-known trend in the world, that software patentability is not yet a clear legal concept. It's still under discussion. Various jurisdictions grant various regulatory requirements in order to grant a patent on a software. It's a difficult thing. However, all in all, even if, let's say, the originality, unicity conditions are not met at once by all software developed, we would say that in order to benefit from protection, the UAE has certain regulatory tools that would, I would say, support IP protection. It has a copyright legislation. It's Federal Law Number 7 of 2002. It has the legislation related to trademarks. Yeah, we are discussing about Federal Law Number 37 of 1992, and it definitely has legislation related to patents. Obviously, it's part of the Berne and Paris Conventions and part of the TRIPS agreements. Therefore, from this perspective onwards, we would say that sectorial legislation is somehow well equipped in order to respond to these new challenges with these new technologies. All in all, I would continue by saying that that we must recognize the efforts done in here by the regulators in order to incentivize the businesses and to allow via certain hubs for the financial technology to be developed into a well-regulated environment. Obviously, there are several governmental initiatives that we would need to note. We have said already the UAE blockchain strategy of 2016, as well as the Mcash, the digital, let's say, currency governmentally developed at the level of 2017. So we would, I would say, have a lot of developments coming in the upcoming years. Now, moving forward, obviously for an investor or for a lawyer activating in the fintech field, we would need to look into the trends. The trends I have here a dual nature. On the one hand, we have the regulation and licensing trends, but on the other hand, we have the contracting trends and what is actually happening in the industry. For this, we have started with an example, which is the classic card acquiring scheme, which you can see on the right-hand side of the slide. So obviously, this circuit is subject to a series of contracts. The cardholder, the payer, pays by card, for instance, to a merchant. Now, the merchant, in order to process that particular payment, goes through a series of other contracts which are not free. They are commissionable to acquirers, respectively aggregators, the scheme rules, or let's say Visa, MasterCard, Amex, or the processor of the cards, and finally to the card issuer. Obviously, banks operate with interchange rates. So this industry runs on a lot of running capital, I would say. Obviously, for a merchant, who would use a financial technology solution, it would be interested to know whether he or them, if we discuss about a company, they opt for a merchant account or they use aggregator services. So this is a decision that exceeds somehow the legal domain because it's a legal and commercial decision. Obviously, a merchant that has a high volume of transactions can opt for a merchant account, but at the same time, if that particular merchant is a micro merchant, needs to be supported in order to move to seamless payments. Therefore, probably they'll use an aggregator of services, and all these services are subject to underlying contracts that we usually take care of. It is good to know that for a fintech, let's say, operator in the market, it is interested to develop solutions that are approachable by macro merchants, by micro merchants, etc. So we have seen a lot in the UAE that the sector of software development, in order to be used for fintech technology, is actually growing, and is a domain where a lot of investment is being carried out. Now, in order to move into the legal trends per se, we would need to refer to several historical events, and these historical events start back with the regulation in SEA in 2017, where the digital currencies have been set to have, let's say, an uncertain nature. It is only in 2018 where the SEA had a plan to regulate the initial coin offerings as securities in the market. Further on, I would say that from a legal perspective, we've seen an increase, I'd say an ascending trend, in the provision of B2C solutions, business to customer, as well as in the provision of technology solutions to be used in the fintech industry. Another trend that we have seen, we've seen that the ADGM is quite active in issuing guidelines for crypto assets, for the robo-advisory, artificial intelligence. This proves beyond doubt that the regulation is evolving And these standards of financial services would be clearly set in a short span of time from now on. We have also seen here an increment of open banking services. As probably everybody is aware, we are using Apple Pay, Google Pay. There's a lot of other alternatives, NOL payments, etc. So this is again a trend that interests us as lawyers for compliance reasons, for contracting reasons, for deployment of these contract reasons. And finally, there's a lot of sectorial legislation that needs to be followed, because obviously each and every player in the fintech field is more or less a corporate structure that needs to comply with the financial regulations, with the newer trends that have been set in the market in terms of economic substance, data, employment. So all in all, I would say that a player or an entity activating in this particular domain has a huge, let's say, openness to be impacted by various legislations with relevance in this particular field. Moving now forward, we know that the fintech industry is well incentivized in UAE and all in all in the region. I would refer to two classical examples, which are the ADGM and DIFC incubators, accelerators. Yeah, the Fintech Hive and the Red Lab in regulations in ADGM. What is the purpose of these incubators? The purpose is that in a well-regulated environment, the companies or the entrepreneurs can test financial technology for a certain period of time. And upon completing certain thresholds, they can move into complete licensing, therefore being active and ready to use in the market. Aside from the unicity of these incubators, we would say that indeed they have called upon a lot of investments in the region, which is a good trend. And all in all, we would draw the attention upon certain reservations that entrepreneurs, lawyers, practitioners would need to look into upon advising or entering or doing business in this particular market. ADGM has, for instance, made a clear reservation on the offerings of securities or initial coin offerings. All the regulators, aside from them, DIFC, SEA, have made the same reservation. The market is not yet matured, the regulation is not yet matured, therefore it's not yet open for, let's say, seamless free transactions. The approach is absolutely normal given the status of development of these trends, and we've seen the same approach in different other markets. We've seen the Eurocoin history with the Central Bank of France. We've seen the Deutsche Bank that has actually listed a series of products that are based on crypto assets. So therefore, the regulation develops and the products that the players develop are in a relation of direct proportionality, I would say. Now, moving forward to the last part of our discussion, I would like to highlight that for a fintech player, let's say a payment processor or a provider of digital solutions, or let's say an investor interested to operate a fund or an ETF in UAE, there are two main points that need to be looked into very carefully. Number one is the licensing, and number two, the contractual part. We've seen technology contracts that rendered penalties of let's say, comprehensive amounts. We have to also say that aside from the legal regulation per se, there's a lot of technical regulation that the central banks usually look into, the service levels agreements, the performance indicators that are set for the financial technology according to these pre-edicted level agreements from the central banks, for instance. Therefore, the licensing and the contracting parts would be, I would say, the most important ones where an investor would need to look. On a different note, given the comprehensive nature of the domain, the compliance requirements are rendered as high. To put things in a very simple language, a fintech company is all in all a corporate structure with a very specific domain of activity. So it needs to comply with the full corporate requirements as well as with the financial regulation per se, and as the case may be, with another financial or non-financial regulation. In the legal spectrum of fintech, there are still a lot of gray areas. The market is not, in UAE in particular, is not completely regulated. The regulation is yet to reach its final stage. Therefore, the technology would need to absolutely follow that. But all in all, for any legal practitioner that or business entrepreneur that would activate in this particular field, I would rather render a couple of points as being essential. Number one is, as said, the licensing. Number two, the contractual structure, and moving forward from here, a proper investment structure, a proper, let's say, compliance mechanism, and all in all, a good policy spectrum that would run as an inflation hedge for situations of economic or legal downturn. I would stop the discussion in here. Obviously, the discussion on a fintech can be quite comprehensive, but I know that in order to comply with our time framework, we would need to respond to a number of questions. Therefore, thank you for being here and thank you for listening. And I'll just invite my colleague Jan to go us through the question and answer session. Thank you again.
Thank you, Laura, and thank you very much for that valuable insight. It's been very interesting and informative. As we've now reached the final session of our webinar, we'll be moving on to the live Q&A session, and I can see that we've already received a number of questions. Due to time constraints, we might not be able to cover everything, and I encourage anybody, if we haven't been able to answer your question here, that you email us at info@fichtelegal.com and we will respond to you there. So moving on to the first question, I can see Laura, someone has posed, do you feel the regulations surrounding fintech are stable or will be fluctuant to change? Are there any regulatory implications that companies and agencies need to keep in mind of?
Thank you. The question is actually good. We note that a lot of our clients and a lot of our business partners are not completely aware on what fintech means. So even for us as lawyers, as said, it's one of the main points that we have found with this discussion is that things are not completely clear and they don't have a beginning or an end. It is how it is. It is a hybrid domain. There's a lot of regulation to be looked into. In order to make things simple, the regulation that would basically apply is the regulation at the place of issuance of that particular financial service, which is UAE in our case, in our discussion. So as said in the discussion earlier, yeah, we need to look into the financial regulation as well as into the sectorial regulation, corporate, commercial, contracting, intellectual property, so whatever is permissible in order to make that that business work. As a corollary of these, I would say that the licensing part is the most important one, because obviously it determines what that particular business can do or cannot do. Therefore, we usually advise our clients to be very careful on that part. And aside from the licensing part, obviously the companies and the players would need to look very well into how they build their contracts, how they acquire their market share, what kind of investment structure do they opt for, what kind of corporate product they opt for, because we can discuss about C3 licenses in DIFC, DGM, we can discuss about smart solutions, we can discuss about IT development, we can discuss about APIs, about artificial intelligence. So each and every of them would require a separate specific compliance mechanism as well as contractual mechanism. So I hope that I managed to provide the required response. If Jan, if you have any other questions, please.
Yes, thank you, Laura, very much. The next question, which has been posed, is how do you feel the role of fintech will disrupt both the legal and insurance market?
Thank you for the question, first of all. The fintech, as said, is a sector that would have a significant growth in the next couple of years, although its historical span is not very long. So I would render this industry as mercurial. There's an array of instruments that need to play together in order to, let's say, to make a product workable. Obviously services markets, such as the legal services in our case, need to respond. Obviously technology is not an easy domain, inclusively for a lawyer, and indeed only the specifically qualified or experienced firms can actually respond to that. For the legal trends, I have observed that there are many law firms that run the fintech under the TMT, Teen Technology Media Telecom. I would personally believe that the fintech is a sector by itself. It's an extremely narrowed and extremely specialized field. Therefore, it is a disruptor because the sector is growing, the law firms need to respond, they need to respond up to the market standards. This is going to challenge the capacity, the professional fees, the way in which law firms structure their legal services from now on. Everything is technology based. So indeed it is or can be a big changer in this industry. Now, when we are discussing about the insurance industry, since this is part of the question, the situation is more or less the same, because nowadays we are discussing about insurtech. Nowadays we are discussing about the usage of blockchain technology. So a lot of middle services would be more or less eliminated. This is going to reflect in the pricing of the insurance product, in the underwriting, in the relationship with the reinsurers, and so on and so forth. So obviously, we're discussing about a business sector that would be repositioned, realigned to these technological developments, I would say. So hopefully, I have responded to this particular question, and I'm waiting for your new questions. If you have any, please.
Yes, so Laura, the next question is, if I were to set up a fintech entity in this jurisdiction, what IP rights apply to fintech technology in general?
Yeah, it's a very good question. A lot of entrepreneurs seek for that particular protection. We already said that software to be patented, to be granted as an invention is a difficult domain worldwide. But aside from that, we have copyright protection, which is largely granted in here, but it's not automatically granted, it's subject to registration with the regulators. We have trademarks, we have, let's say, a lot of protection for these intangible assets that a company is producing. How the market goes now, there's a lot of NDAs, non-disclosure agreements that companies are using prior to sharing, let's say, sensitive data. And we've seen quite an interesting trend in between the technology providers and the beneficiaries of that particular technology, is that the IP is regulated through contracts. For instance, let's take a very simple example. We have, let's say, a provider of bank aggregating services for micro merchants, and this aggregator, in order to work, probably would need to develop a certain software that would make, let's say, their online platforms work better, their onboarding, etc. In order to develop that software, they probably need an accelerator, which is developed by a company abroad or by a different contractual partner. This particular accelerator, in order to work to the specificity of my aggregator, needs to be developed. So now we are discussing about the software development, which is probably mostly developed by its owner, but needs to be adapted to the needs of my aggregator. At that point, I've seen a very interesting split of intellectual property rights in a contract, whereas whatever has been developed for the aggregator remained in terms of IP with that aggregator, wherever existed in the accelerator remained with the owner. Therefore, this particular case was a happy one in the sense that everyone was happy in sharing the royalties, rights to licenses being used, sold. So that's another income generator, another method of streamlining income for a business. So that's how we've seen things being done. But all in all, we have the regulatory tools, and obviously the technology domain, all in all, comes usually with the comprehensive contractual structure behind, and that's a second level of protection that we grant our clients, them being payment services, aggregators, technology providers, software developers, etc. So that would be, I guess, it.
Thank you very much, Laura, for providing an answer to that. The next question is, are we likely to see an uptick in banks investing in their fintech partners? And what are some of the key legal and regulatory considerations for such investments?
The question is very good, very interesting. The banks are actually doing a lot of investments in this direction. As said, we would not be able to make a rule applicable worldwide. So we are discussing these matters on contingency basis. In UAE, we are aware of certain developments. We have advised on a couple of products that were designed to be used by banks. As said in our presentation, the regulatory framework, is again financial services, central bank level agreements, etc. And on the corporate side, licensing, corporate structures, investments. So they are not in any way different than what we've discussed about in our presentation. We note that the banks in general are, let's say, entities or body corporates with a comprehensive corporate structure. They are listed companies, they are joint stock companies. Therefore, we would need to look carefully into that. But all in all, I'll go back to basics and to my final finding that probably the most important part in this is the licensing part, and doubled obviously by how the contract is being made in between the providers and that respective bank. But all in all, I'd say that yes, this trend exists, and it is our estimation that in the upcoming months or years, it's going to be, I'd say, a growing business domain. Yeah, we have that strong feeling. Yeah, thank you. Any other questions?
Yes. Thank you very much, Laura. We have received a very good question, which is, what is the preferred legal structure for an equity investor in fintech to invest in the UAE companies?
Yeah, it is a very good question. Actually, it's one of the questions that our clients regularly ask. In giving an answer, I'd say that there's no answer fitting all possible situations, because as a lawyer, I would advise my client to go into a structure that has the least liability and the highest possibility to generate income. So at that point, this is stressing on our business acumen as lawyers. So we need to demonstrate that we are not exactly let's say very legal, but at the same time quite business-oriented professionals. This is paramount in this kind of industry. I would say that it depends from a situation to situation, and it depends on the specificity of that investment. Because, for instance, let's say an IT provider, an IT developer can be of many types, can be a company licensed for financial services or cannot be a company licensed for financial services. Yeah, at that point, the investment structure is quite easy. Yeah, the investor will acquire shares or share capital in an existing business. But whenever we are moving towards the financial services market, and whenever we are moving towards financially regulated services, things tend to be more comprehensive, because at that point we discuss about different type of licensing requirements. Say, for instance, the C3 licenses for financial services in GIFC. It depends on the intention of that entrepreneur to invest directly or through a vehicle, or that entrepreneur willing to, let's say, make only an equity investment or to participate actively in the business. So there are many variables to be considered in order to give an answer. But all in all, these variables can be reduced to the following taxonomy: what the business is doing and what is the intention of that particular investor or entrepreneur. And all in all, the investment would be, let's say, advised by us on a liability revenue ratio. I think that's the golden proportion that that an entrepreneur would need to look into. And obviously, we would advise our clients to look very well into the market trends, because the market is fluid all over the fintech industry worldwide. The regulation is evolving fast. Situations like the 2020 pandemic, as said, made these asymmetrical assets investments quite volatile. The liquidity providers were not, let's say, that open to move this market. We know a number of companies that unfortunately have been forced into exit due to this unavailability of liquidity. So all in all, we would issue a comprehensive, I'd say, analysis prior to advising the client to go within one direction or the other. As said, it's a comprehensive domain, and I think everyone knows that by now. So hopefully my insight was useful for for the participant who asked that question. Thank you for that. Indeed, it's a good question, a question that lawyers need to respond to regularly. So, Diana, I'll pass it to you if you have any other questions, please.
Yes, it looks like we have time for a couple of more, if you don't mind, Laura. The next one is, as artificial intelligence already on the rise with financial sectors, do you see more opportunities for AI developers to set up operations within the UAE?
Oh yes, definitely. Definitely, it's for artificial intelligence. I think the UAE is a very attractive place. I'll start with what we see now in the market. There's a lot of artificial intelligence used for, let's say, customer service, I'd say, but probably in the next period of time, the growth of artificial intelligence will move to a lot of other sectors. So yeah, I remember a very interesting discussion during the Dubai Arbitration Week in 2019, and I was discussing with the in-house counsels in one very big technology producer who was saying, "I'm afraid that one day a robot will get my job." So yeah, artificial intelligence is definitely a domain on the rise, I would personally believe that a good regulatory framework would support in that, because we already have it at some point, but the artificial intelligence is by itself a domain, and it depends on what kind of technology you are using. It is a self-learning technology, it's a program technology, it operates primary or secondary data, etc. So there's a lot of legal discussion in artificial intelligence overall. So probably we'll reach one of the descriptions set by Anisimov in one of his novels. So yeah, the regulation to be developed is actually a must for artificial intelligence, but we render this domain as a growing domain. Yes. Thank you for that.
Thank you very much, Laura. We've had another question from an anonymous source asking, from a corporate perspective, what could Fichte Co offer to the table for a potential fintech entrepreneur?
Yeah, thank you for that. I would say that if I'm saying that we are fully fledged or fully qualified to do fintech, that would sound cheesy, because we don't want to go into that direction. As a law firm, we are trying to respond to the client's needs, first of all. That's our, let's say, dogma, if you want to call it like that. Secondly, we can obviously advise from the incorporation to the compliance stage on all possible processes. We can definitely draft, advise, review, let's say, the corporate structures, the contracts. We can advise on possible liabilities. We can advise on, let's say, possible forecasts that the changes in the legislation may imply on that particular business. And we have actually a couple of inquiries nowadays that deal specifically with this particular fintech market at the IFC. So for us as lawyers, it's quite challenging. Is a brand new domain, extremely comprehensive. So we can actually set, let's say, investment framework for the client, specific contractual structure in order for the client's business to be able to actually respond to and to have a hedge for any regulatory economic downturns that may happen. Lately, we've been involved in a number of cross-border transactions related to this particular field. And I would say that when we can actually work at the crossroads of multiple jurisdictions, which actually happened successfully. So I think that we have now listed a number of things that we can do. I hope we would not be accused of lack of modesty, but we are quite potent in the field. So I hope this responded to the question.
Thank you very much, Laura. I'm just keeping an eye on the time, and I think if it's all right with you, we have time for one more question, which is, what are some of the legal compliance measures that a crypto trader should consider?
Yeah, I was sure that this question is going to come at some point. Happy to respond. The crypto traders in the market need to be regarded as of now with certain reservations, as we said. In the discussion, we have highlighted a couple of initiatives of 2017, 2018 of the regulators, SEA, DGM, DAFC. But so far, the cleanest advice that someone can give is that it's not yet open, freely open for, let's say, trading crypto. And it's now in the formation stage that the legislation starts developing. And we know already the governmentally backed initiative of Mcash. So we are in the incipient stages. And I would clearly recommend for the crypto trader to be extremely careful with the licensing requirements. Those are not easy. And all in all, I would suggest that the market trends need to be very carefully looked into consideration, because, as said, now in 2020, we have seen markets overreacting. So some of the first assets to be liquidated were these crypto assets. This had some kind of effects on the overall digitalized payments market. But all in all, I'd say that compliance, licensing are the most important things that the crypto trader should look into whilst being in here in UAE. Yeah, so hope that that responds to the question.
Yes, thank you very much, Laura. And unfortunately, that brings us to the end of our session today. I would just like to take this opportunity to give a special thanks to you. And I think we can all agree that you've provided some very interesting and comprehensive insight into these key issues. And I would also like to say thank you to everybody that has joined us today. I would encourage you to keep an eye on our website. This webinar will be posted there later today. On top of that, we have a YouTube channel and social media accounts. And do keep an eye on that, because we will, in the next coming months, we will be hosting a series of webinars, and there might be something of interest to you. And on that note, yes, thank you everybody, and I hope you enjoyed this webinar. It's been a pleasure hosting you, and that concludes our session today.